All right, hey, what's going on, cash flow hackers? It's Chris with Life 180, and I wanted to come on here and do a quick live talking about the current state of affairs in our economy. The CPI inflation numbers were just released yesterday for March of 2022, and ultimately, there's a lot going on. There's a lot of talk about the housing market. There's a lot of talk about the stock market. There's a lot of talk about inflation and the worries about all that. And so I just figured I'd hop on here and give my 2 cents about what I think is going on, what ultimately I think could be done about it, and kind of go from there. So without getting into a whole lot, what I want to do here first and foremost is show and just share really quickly something. I'm going to spend 2 seconds on this, but I think it's important to see because a picture says 1,000 words, or in this case, probably even a lot more. But you can see the graph here. This is the consumer price index graph, and you can see here in March of 2022, inflation has gone up by an extra 1.2% for this month alone. So annualized inflation, now we're at 8.5% inflation. That's the highest it's been in 40 years. And that is not a good sign, folks. That is a really, really bad position for where we are. Just to give you the context of this, and I'm going to pop myself on screen here because I wanted you to just be able to see that. So just to give you a little context on this is if you understand the rule of 72, basically what the rule of 72 says is you take 72 and you divide it by the inflation rate. And that is the amount of time it will take the money to double. So typically they utilize the rule of 72 from an investment perspective, right? So that would say if you were getting a 10% rate of return, you use the rule of 72, you go 72 divided by 10, and they say if you invest and you earn 10%, then within 7.2 years, your money will double in value. Now that's the good side of it. The bad side of it is when we talk about 8.5% inflation, we're talking about the fact that when you divide that 72 by 8.5, we're talking about the cost of everything. If this doesn't get reined in and doesn't get, put under control, we're talking about the cost of everything around us doubling in the next 6 to 7 years. And now, will they get it under control? I don't know. I mean, let's look around. And it's the big thing that nobody really knows what's going to happen right now, and there's a lot of speculation about it. Let's talk about the Federal Reserve right now. The Federal Reserve is talking about doing 6 rate hikes over the next 18 months, right? So 6 rate hikes. So what we need to do to understand what that means is a rate hike in their mind is about 25 basis points. So 6 rate hikes at 25 basis points would equal about a 1.5% increase in the federal funds rate. Now, what is that even going to do? Because at 8.5%, if you understand how inflation works and you understand the fractional reserve banking system and Keynesian economics and the Federal Reserve banking system that we operate in, then you understand that when inflation goes up, we have to raise interest rates in order to pull money out of circulation. But the problem is nobody anticipated the environment that we're living in right now, that we're going through. Traditional economic policy and theory is all based around the idea that when inflation goes up, that means we're in a healthy economy. So in a healthy economy, we can afford to raise interest rates, right? We can afford to raise rates and put stress and pull money out of circulation, and that will just slow down or cool down the heating of the economy. And so what's happening now, though, is we're having inflation that's out of control, and we have an economy that really has no health to it, that really has no stability to it. And what I think is really important to understand with that is we're in this environment right now where if we raise rates, we need to raise rates by an amount that we can't sustain. Like, let's go back in history and talk about 1979. In December 1979, Paul Volcker raised rates from 6% to 19% virtually overnight. That's a 13% increase almost overnight. Now, we're talking about the fact that we're trying to do 6 raises in the federal funds rate over the next 18 months, and that's supposed to do something. Well, what it's doing is it's freaking the market out because everybody knows that this is a house of cards, and ultimately what it comes down to is if they raise rates by that amount, it's not going to do anything. It might slow inflation down a little bit. But once again, getting back to that concept, if we don't raise the federal funds rate up, if we don't get the cost of money higher than inflation, then it's not going to keep up with inflation. Inflation's just going to keep going, and it's going to get worse and worse and worse. And what we're going to see is this runaway inflation. And so we have to, Peter Schiff talks about this all the time. He says it's the equivalent of a heroin addict trying to get off of drugs and expect to get off the drugs with no pain, right? Like if you are addicted to something, which is, we as a nation are addicted to cheap money. Everything is this inflated bubble based on cheap money. And where we are right now is we have to get in a position where we just take our medicine. We have to go through a down cycle. We're not going to get out of this without pain. And so, when you look around right now, and you look at the Fed policy, which is a joke, it's not going to get us where we want to go. It's not going to solve any problems for us. It's not going to, accomplish what they're hoping to accomplish. The bond market is responding right now. The 10-year Treasury note, the Treasury yields right now are at 2.65%. The 30-year Treasury yields are at 2.77%. And all this talk about wanting to raise the rates and increase the federal funds rate to pull money out of circulation to rein in inflation. The bottom line is we can't do it. We're $30 trillion in debt as a nation. I don't know if you know this or not, but $30 trillion in debt as a nation, and 30%-ish of that money is short-term 1-year Treasury note duration or in that range, anywhere between the 1 and the 5-year Treasury notes is actually would be more than 30%, but 1 year is 30% or more. So it's turning over every single year. I guess that's the point I'm trying to get to. And so as our debt as a nation on our $30 trillion is turning over, what does that mean? Every time the Federal Reserve bumps up, even if they went to 1.5% over the next 18 months, which I don't even think they can do that, because that's going to put so much stress on our national debt, on our government to be able to sustain and just make the interest payments on that debt alone. If the Federal Reserve did what they need to do and raised interest rates, the federal funds rate, to 10%, once again, this is not outside of the realm of possibility. It happened in 1979, and it took somebody with the guts and the foresight to be able to understand what it takes to control this inflation. And if you look back to 1979, 1980, when inflation was 13.5%, they raised the federal funds rate up to 19% to rein it in, to get to really just cool it down. And what did that do? It led to the booming 80s. It led to an economic time of prosperity that was so good that we have a name for the decade, right? And so it's not that there was it came without its pain. There was a year or two of challenge and pain that came with it, but the benefit that came after the fact, because of the responsible decision of raising rates, benefited everybody. Now, on the other side of the pendulum there, we could have had just runaway inflation. And if we had that back then, obviously, God only knows where we'd be now. But this is, we're being put in this position where we're facing this decision where we have consequences, right? If we allow rates to stay low, we may feel a little more comfortable for a short period of time. But the bottom line is inflation is going to get out of control, and we're going to have what's called a deflationary depression, because as we have this deflationary impression, cost of things, going to the store, paying for gas, paying for your electric bill, the cost of everything is going to go through the roof, and nobody's going to be able to afford it. So they're going to have to really rethink decisions. I mean, we have all the government stimulus money that we printed that is a big driver of this inflation. All of the things that people went out and bought flat screen TVs, our consumer debt in this country is near an all-time high. Actually, it's at an all-time high. The government debt is at an all-time high. The unfunded liabilities in this country are at an all-time high. And so we're in this situation where we need to deal with this. And if inflation keeps going the way it is, then we're going to have a problem. Now, question is, what do you do about it? The challenge is, we have all this uncertainty. There's the housing market, there's the stock market. I'm a big believer right now that we're in towards the end, at least, of the greatest bull run that we've ever seen in the history of this country, and probably the world for that matter. We're experiencing the consequences of the monetary policy that that got us here, right? We haven't even really fully dealt with the Great Recession and all the challenges and issues that caused that recession to happen. And then our decisions to how we bailed ourselves out from it, and the monetary policy that kind of quote unquote saved us back then. Well, guess what? We didn't really save ourselves. All we did was kick the can up the hill to a bigger cliff, and we're facing that cliff. We're approaching that cliff right now. And so my focus and what I want to encourage everybody to do is to really think about what's going on right now in the world and what you can do and how to position yourself, because I don't think it's a matter of if, I think it's a matter of when the market corrects. I think having your money in assets that are exposed to a lot of risk right now is really dangerous. I mean, think about it this way. How much sense does it make to have your money in investments in the markets, in assets like that are at all-time highs, that their price to earnings ratios are skewed to all-time highs right now, that they're overvalued in price, and yet they keep going up, and the fundamentals of good, solid investing just don't make any sense right now as far as like what the correlated movement is with the price of these assets. And so my encouragement to people is to think about where your money is allocated. Think about liquidity, because this coming correction is going to either give you an opportunity to create a lot of opportunity in your life, to be able to find opportunity. If you keep your money safe, guaranteed, liquid, accessible, you'll be able to thrive. You'll be able to find opportunity. Warren Buffett always says, make money when there's blood in the streets, right? I use that a lot in my videos because I think it's one of the most important phrases that people should understand. That's what wealthy people do. And right now, you have an opportunity, no matter how you feel about where you are with your personal finances at this moment in time, you have an opportunity to position yourself to eliminate your debt, to do everything you can to eliminate as much toxic consumer debt as possible, and then get as liquid and stable as you possibly can during this down cycle that's about to come. And listen, I'm not even though I kind of enjoy listening to these guys, I'm not Glenn Beck, I'm not Robert Kiyosaki. I don't believe that half the population is going to get wiped out. I don't believe that it's necessarily going to be this massive reset, so to speak. I believe in people. I believe in humanity. I believe that we will get through this and that we will come up with a solution. But I also believe that what you do over the next anywhere between 3 and 36 months is going to have a huge impact on the rest of your life when it comes to your money. And let's face it, what has, outside of our faith and our family, what has more of an impact than our money in our lives? And so my encouragement to you is to really think about how your assets are allocated and where you are keeping your money, because it's really scary right now to keep your money in a bank account, right? It's really, really scary because you either got to go invest it, you got to put it in a bank account and lose money to inflation. If you invest it, you're taking on risk and you have the chance of loss. If you put it in a bond, then it's tied up. Let's face it, 10-year bond at 2.65%. If you did that, you're locking your money in at 2.65% when right now inflation's 8.5%. So you're basically losing 6% every single year. That makes no sense, right? And so what are your options where you can get the guarantees, where you can have the stability, where you can have the liquidity, and you can actually be opportunistic and you have the profile of an opportunistic investor? And I tell you right now, in this moment in time, there's never been a more important moment in time, I don't think, in at least in generations, where having the mindset of being an opportunistic investor is more important now than ever. So that's my encouragement to you. If you have any questions, I'm going to just cut this here short because nobody knows what's going to happen. But what I do know is that all of this stuff plays into your future, and money is factored into every decision that we make right now. And it has to be. It has to be. And so if you have any questions about anything, comment in the comment section below. There's a link down in the description. If you want to get on the phone with one of my Life 180 coaches, you can get on there. They're people that I've trained You can work with them. They can answer your questions. There's no pressure, no harm, no foul. You can absolutely reach out to them. If you haven't already, make sure you subscribe to this channel. I'm going to be actually starting to do a couple lives every week just because I feel like we're coming into this season and I need to do this. I need to go live a couple times a week on top of the content that I drop every single day. I literally drop a live video and a short video every single day. And now I'm going to go live a couple times a week on top of that just because I feel like it's so important right now. So, that's it for today. Hopefully you found value in that. Once again, if you haven't, subscribe, hit the bell. That way you get notified, and smash that like button if you found value in this, and share it with somebody. And that's it. Until next video, have a blessed, inspirational day. God bless. Take care.